Welcome, everyone, to the PCI Practical Matters Podcast. Today, we are joined by Nichole Atallah. Take it away, Nichole.
Thank you so much to the Public Contracting Institute for having me. What are we talking about today? We are going to be talking about the Department of Labor's long-awaited revisions to the independent contractor rule. So that's what we're really talking about when we say, take heed, DOL revises the employee classification rule. And why do we care about this? Well, just for a little bit of background, there really isn't a huge substantive change in the test for independent contractors. They're just going back to the test they had pre-2021. So pre-2021, they had what they called the economic realities test. And we're going to go through the components of that in a minute. During the Trump administration decided that that particular provision was not as friendly to companies as that administration would like it to be. The Trump administration said they wanted to give companies kind of some bright line tests. So the Trump administration implemented this new rule. It was really actually pretty interesting because it was the first time they'd really codified a rule like this. Otherwise, it's kind of just been done in case law and Department of Labor guidance. So then we had the Trump, what we're going to call for purposes of this podcast, the Trump rule, the Trump independent contractor rule. What this new rule does, and it was published on January 24th, it will be effective on March 11th. And what it did was basically say, we're going to go back to the rule that we had. So we're going to rescind the Trump rule, and we are going to go back to that economic realities test that we had for independent contractors. And why do we care whether someone's classified as an independent contractor or not? Well, there are a couple of reasons. One, because when you hire an employee, you have to pay the taxes. There are benefits you might have to provide somebody. Those employees also can take advantage of unemployment, workers' compensation. They can take advantage of their rights under Title VII or the National Labor Relations Act. You also have to pay employees overtime. You have to pay, if they're hourly, you have to pay them a certain salary. If they're salaried, you have to comply with those Fair Labor Standards Act rules. So in order to make sure that companies aren't just classifying everyone as independent contractors to get out of, paying someone as they should and following the rules under the Fair Labor Standards Act, the Department of Labor said this is the test that we are going to apply to determine whether someone is an independent contractor or not. For all government contractors out there, this can really impact how you bid on government contracts and whether the people that work on that contract are considered employees for purposes of limitations on subcontracting provisions, whether they are subject to prevailing wage laws, how you would pay them, to satisfy certain contractual obligations, and what laws those employees can take it, or those workers rather, can take advantage of when they work for you. There are a lot of government contractors out there that when they go to onboard professionals, they try to onboard as employees, and professionals say, I don't want to be an employee. I want to be an independent contractor. And contractors and government contractors need to understand the risks that they're taking on when they accept that kind of arrangement or when they push people into that kind of arrangement. And one of the big risks is those overtime, those subject to the Fair Labor Standards Act regulations, right? How do we become required to pay overtime to people, to follow all of those Fair Labor Standards Act regulations regarding salary basis tests, deductions from pay, paying the taxes, paying the benefits, right? So a lot of companies like to use independent contractors when appropriate. Before we go through the elements of the new test for DOL purposes, I want to emphasize that this is the federal test for independent contractors when it comes to the application of the Fair Labor Standards Act, minimum wages, overtime, salary basis test. There are a lot of other laws out there that can impact independent contractors. There are state laws. There's Department of Taxation, or the IRS, that has its view on the matter. State unemployment agencies may have a different test. So there are lots of different independent contractor tests that are different variations on what we're going to talk about quickly today. But I just want to emphasize that this is the Department of Labor's new published test effective March 11th that governs things like pay, right? Those Fair Labor Standards Act rules. It does not impact the other laws that might be out there either on the state or federal level. But a lot of these agencies do look to the Department of Labor guidance to determine who's an independent contractor or not. In a lot of state cases, you'll hear things like the ABC test or different tests that might apply. Again, not talking about any of those. We're talking about this economic realities test that the Department of Labor is now imposing as of March 11th that will take the place of that 2021 Trump independent contractor rule. The Department of Labor is taking a multi-factor approach again. Okay, so now is where we're going to move into what this test actually looks like. Okay, what is the Department of Labor going to consider? And when we talk about multi-factor tests, what we're saying is that no one factor is dispositive. That's the lawyer word for no one thing makes someone an independent contractor or not. For example, clients will ask me, but Nichole, I have an independent contractor or consultant agreement with this person where they've agreed that they're an independent contractor. Isn't that enough? Not really, right? It might be one factor that the Department of Labor takes into consideration. So what are the factors? So I'm going to talk about them. I'm just going to go over the factors. I'm going to list them. And then I'm going to go kind of back to the beginning and talk about some different considerations under each of these kind of 6 areas that you need to take a look at. The first one is opportunity for profit and loss, depending on your managerial skill. The second are investments made by the worker and the potential employer. So what investment does each make in this employment? The third is degree of permanence in the work relationship. 4th, nature of degree and control. 5, extent to which the work performed is an integral part of the potential employer's business. And 6, skill and initiative. And the Department of Labor, when they come in, is going to go through each of these factors and weigh it, right? And I'll talk to you a little bit about what the Department of Labor finds, in my experience, is found more persuasive than others, but I just wanted to list out those 6 factors. So let's go back to the first factor really quick. The opportunity for profit and loss on managerial skill. What does that mean? So when you hire a worker and they are paid by the hour and you provide all of their equipment, they have really no opportunity for profit and loss, right? Because it's a services type of arrangement. They're not building a widget. They're not investing in any capital improvements that they'll need in order to perform this work. They don't really have the opportunity for profit and loss. They're being paid by the hour. Doesn't matter how efficient or not efficient they are. One way that you can, if you are looking at an arrangement with an independent contractor, it might make sense to pay them on an hourly basis based on what they're doing, that you're paying them for services that require time as opposed to like a flat fee on a contract that would really give you that opportunity for profit and loss, right? I'm going to pay you $5,000 to get the job done, as opposed to I'm going to pay you $200 an hour. And as long as the job takes you, it takes you. A lot of staffing type positions on government contracts, though, do kind of require that hourly rate, or that's the expectation on payment. So how do you establish things like opportunity for profit and loss? One way you can do that is to make sure that if a worker does not perform adequately or they produce something that's not sufficient, that you can tell them to re-perform the work at no additional cost. So that's one way that you can build in some opportunity for profit and loss. The second factor is investments by the worker and the potential employer, right? And when they talk about potential employer, they're talking about, the contractor, right? So what are the investments in the business that the person has to make? Are you providing, all of their equipment for them? So you're sending them the computer, you're sending them their chair, you're reimbursing them for all of their business expenses. There's really no investment that they're making in advertising their services, in having multiple clients if they're working for you all the time. So what is their relative investment in their business? Did they have to buy a truck and invest in paint and tools and all of those things because they're a painter? Perhaps that will get you closer to investment in the business than if they are really just staffing a professional position on a contract where the computer is provided for them, the phone's provided for them, and they are working a 40-hour week for the potential employer and nobody else, right? So then in those particular cases, there are really no opportunities for profit and investment made by that particular person that's doing the work. So what investments are they making? That they'll look at whether they've had to invest any time or effort or money in their business to get going. 3, the degree of permanence of the relationship. So I referred to this also in opportunity for profit and loss. I referred to this a little bit in terms of investment made by the potential employee and the employer. But it also just is standalone on itself, will be evaluated. Is this person working for one employer 40 hours a week and not advertising, not doing any work for any other, particular companies, things like that? So they've been doing that for you for 2 years. They did it for the last contractor for 5 years. That is going to weigh heavily against them being an independent contractor. So the economics of this is really important, right? There are opportunities for profit and loss, number one. The investments that they've made, do they have their own computer, their own phone, etc.? And the degree of permanence, are they working on one effort all the time on basically a permanent basis? Now, permanency can be viewed in 2 ways. It could be short-term assignments where, yes, I'm a bona fide independent contractor. I have opportunity for profit and loss. I have my own investments, but I'm working on this one matter for 3 months full time. But after that, I'm done. That can cut toward independent contractor as long as the duration's short. But if the duration looks like basically a full-time job, you're probably not going to get there. The 4th factor is the nature of degree and control over their work. We're talking about things like, are they heavily supervised? There can be some oversight by a project manager, for example, that evaluates whether their work is sufficient. But can they decide when to do their own work? Can they decide how to do their own work? Or is someone basically directing how they handle their business? The nature of degree and control over their work is also going to be a substantive factor. Does it really look like an employer-employee relationship? Are they sitting next to people who are employees? And the nature of and degree and control of their work is the same as the employees working right next to them. The 5th factor is the extent to which the work performed is an integral part of the employer's business. So for government contractors, this can be a difficult piece of the test to satisfy. And again, it's just one piece. So we're weighing all of these factors against each other, like against one another, to figure out on balance where this comes out. So it gives a large degree of discretion to the Department of Labor, but it also means that you could, fail one part of the test and still prevail on a total analysis. But the reason that I say that the 5th factor, how does this work fit in with the employer's general business, that can be difficult for government contractors because the business can be defined in multiple ways. I've had some Department of Labor investigations where the Department of Labor has said, well, you're a government contractor, so almost any position that you bid on is integral to your work, right? I like to try to get them to take a more narrow view of this and say, well, yeah, I could pick up a government contract that provides for janitorial work. But when it comes to once a year, I have to do a refresh on the flooring. I don't have people that do that full time. I just sub out that work, and that's perfectly acceptable for me to do. I can usually convince them that like flooring work that happens once or twice a year, or window washing work, might not be integral to my business, and I might have an independent contractor come in and do the work. And by the way, that independent contractor meets all of those other factors. So it's not about the fact that I have a prime contract with the government that includes this in the statement of work, but how integral is that particular piece of the work to my everyday business. So that's what you're really trying to focus on in that fifth factor. And finally, what skill and initiative does this worker need? So that's the sixth and final factor, is that does this require any special skills or experience? Are you just, putting together widgets just like all of the other folks that are working on this contract, and they're all employees except for 5 and your independent contractors? Are we trying to, is there a perception that we're trying to circumvent these rules by making people independent contractors when they don't really have any special skills or initiative that is required to maintain this business that they have outside of being an employee? That's basically it. Again, it's not about any one of these particular factors. It's a multi-factor test, and you will see similarities, different pieces of this test, in other regulations and laws. For example, the IRS rules, state-based workers' compensation rules, EEO type rules, things like that, that really assess whether someone should have been classified as an employee so that they can take advantage of those laws. You will see even stricter rules in states like California, Massachusetts, DC, when it comes to the same types of analysis, but on the state side. So it's a good idea, if you haven't already, refresh your internal standard operating procedures when it comes to classifying folks as independent contractors, so that we are ready and we feel comfortable about that classification decision, or comfortable with the risk that you're taking if you make that classification decision going forward.
Thank you, everyone. And this has been the PCI Practical Matters Podcast, keeping you up to date on government contracting.